Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. The sky is not falling, or at least not yet. Uh, Today we had a little bit of a pullback, right? So I want to do a video that's assessment of the current market. Um, this was really our first serious down day since June, so it just goes to show how spoiled we are because it hasn't really been much selling pressure in a while, and it's really kind of our monthly reminder that the market doesn't go straight up, right? So you may have this may have taken you a little bit by surprise, and you might be a little bit out of position, but um, there's still opportunities out there. So this video is going to talk about hedges and what uh, trades are still remaining that you could possibly target if you're looking, for some sort of downside protection or some sort of bet to capitalize on this pullback, right? So I got the spiders up here. Let's talk about the spiders and Qs first. So actually, I've really been choppy over the past couple of weeks. So this move, maybe not completely out of nowhere, right? There was major divergence in sectors. There were major divergence with stocks within sectors. Spiders would keep getting, these gap ups that would fizzle, be like some late day selling. Breakouts into new highs hadn't been working great. It just seemed that the market or like the spiders were a little tired. Momentum was drying up. Clearly, though, it was still in like this really nice really nice uptrend, but it just didn't have the power behind it that we've seen maybe like at the end of August or even in July. So today, with spiders, what you're seeing is that we're losing this really important 20-day, which has been a great area of support basically since July. So that opens up room down to the 50-day, which you can see we got pretty close to. Didn't quite get there, but I mean that's the really, really clear first target on a move below the 20-day. For the Qs, you can see the 50-day. So spiders was 20-day, Qs is the 50-day. It wasn't the exact same setup, but the 50-day has been just a fantastic area of support since June. Multiple attempts you can see have held, and today it's working on a breakdown. So a real strong follow through, and that's the big thing here is that like even though it's down today, I mean we have had these types of pullbacks and they haven't lasted too long. So if we do break the 50-day with some volume, then what you're looking at as a move to the 100-day. So the spiders break through the 20 sets up a move to the 50, while Qs a break of the 50 sets up a move to the 100. And we have the jobs number tomorrow, so that's going to be a catalyst. We have had selling pressure on Fridays in the past, so the kind of today's weak action, jobs number tomorrow, and the history of some selling ahead of like weekends, on weeks when the market is under pressure, could set up a little bit of a rocky finish Friday. So that's definitely what you're watching going forward. Um, I have done some videos in the last few months, kind of talking about put hedges on the spiders and the Qs. What you'll see from the positions is that we try to always carry some sort of put hedge on the spider or the Q, 1 to 2 months out. And really, like the reason is because pullbacks can sometimes come out of nowhere. Sometimes they may be a little bit more telegraphed. Sometimes they're out of the blue. So I like to have just that bet in place, for days maybe like today when things looked okay, and then all of a sudden you blink and everything's down like 1-2%. The averages are down like 4 points, and basically the cost of hedging goes it jumps because people are rushing in to buy put protection, and you see like an implied volatility jump. Obviously, something that drops like 4 or 5 points, I mean they're going to cost a little bit more. So that's why we always like to have something in place like 1 to 2 months out. Just scenarios like this where you know yes you might be a little bit further out of the money, but it's nice to like not feel compelled to have to like rush into buy because that put spread is already like on, and you kind of like let it do its thing. Uh, with that said, though, I mean there are other ways to hedge, and surprisingly, there wasn't really a serious flight to safety um, trade today. So yes, Spider Qs definitely saw some action in the puts, but other names that typically benefit from weakness in the overall market weren't especially strong. I'm going to pull up the VIX here with a caveat that the VIX can be hard to trade, but what I want to like mention here, this is the actual VIX, the VIX. What I want to mention is that yes, it was up and into like the 15 area, but really when we've had serious market pullbacks, the VIX has usually sailed like well past 20, and even like in June, July, May, the top on typical VIX moves is usually closer to 20. So with it at like 14 to 15 now, if we do get a little bit more of a pronounced pull in, I mean, there actually it should be more room in the VIX here. So a 5 points, 4 to 5 points from where it is now, I mean, it's still like a healthy like 30% move. Um, so it's tough to trade normally, but when we do get pullbacks, it does kind of tend to behave in a certain pattern. And 19, you can see 19 to 20 has often been like an area where it could get to pretty quick, and that's when selling starts to pick up. So the VXX had a decent day today, but if you have the expectations that we're going to get more selling, the VIX, the actual VIX, the VIX could have room to 20, in which case the double leverage VIX definitely should be able to get a little bit more upside here. So yes, it had a pretty big day today, but there is potential for it to have even more before that actual VIX really starts to get into like the topping area. Gold and silver, right? These can be flight to safety names. Silver just had a trade closed out on it today, but overall at exhaustion gap, bullish reversal, working on a flag at the 50-day. Gold similar, and maybe a little bit more interesting here. Had a higher low set up right here, right? Bullish reversal this week, and is flagging right at the 50-day now. So if you get like a little demand coming in, right? A little demand as you get that flight to safety, a little demand could really create like a bigger move because of like the technical setup. So you had a higher low combined with it like flagging right at trend resistance. So if it gets up through the 50-day and say like the 115 area, there's a really big pocket of open air here up until you get to the 100-day. And you can see that like because it's in such a sharp downtrend, I mean, this could really be a move that plays out pretty quick because, a nice technical reversal combined with like, buying as flight to safety could really create like a nice area to catch like a quick trade on like the long side. So like silver and gold, right? Not really moving much. Those typical flight to safety names really aren't responding. The VIX, even though it's at 15, it's still not really in that area where it tends to like top out. And then last, I want to talk about the actual spiders and Qs. I mean, I know I said like you have some put hedges in place, you kind of carry it. But if you didn't have those in place and you're looking to still get involved, yes, implied volatility jumped today, and the cost of buying put protection definitely went up. But when you look at the price of options going forward, like 1 to 2 months out, they're actually still relatively cheap compared to their historical average. So the Spider November main expiration, when I say like at the money puts, are trading at about like 11.5 implied volatility, which is more or less roughly half of the long-term average at like 22.5. Part of that has to do with like the lower prolonged volatility of recent years, but still, I mean, it just shows you that there's still they're still, yes, they may be more expensive than yesterday, but they're still not expensive per se. And you could have gotten them cheaper yesterday. I mean, I'll definitely acknowledge that. But also, when you look at what the November 16th straddle is pricing in, which is $9.50, it still shows that there is some room to capitalize if you are expecting a more a sharper pullback from here, right? And what I mean by that is at 9.5, even if you bought the straddle today at 9.5, what you can see is top to bottom June was about $12, right, for the pullback, and that was just like your garden variety pullback. If we go out to a more significant one in March, 280 to 255, like over a few week stretch. That's a 25 point pullback. And then February, which was obviously a little bit different, but just showing to highlight it for argument's sake here, 285 to 255 is 30 points. So yes, you may have missed the first move, but it doesn't mean that there couldn't possibly be another move coming. And if you're worried about more downside, you're going to have to pay more than you would have yesterday, but there still could possibly be opportunity here because the options are still providing some sort of. I mean, they're not cheap, but they're cheaper than than some of these pullbacks in the past have been, right? So today was a tough day. It was a sharp down day, and if we're caught flat-footed, it's not the best feeling. But there is still opportunity out there, right? If you're looking for hedges, there's still potential to hedge. And really, one thing to take away from all of this is that the volatility, a pickup in volatility, is good for trading overall because it creates opportunities. So, long or short, the movement is what us as traders are looking for. And even more so, the fact that it's happening right before earnings is a great sign because higher volatility around earnings means that, or it could mean that the moves on earnings are actually sharper, which is great, for targeting event trades. That's what you want to see. You want to see those really wild swings. So don't get discouraged. There's going to be plenty of action going forward. Definitely. Things will start to pick up news-wise next week is when you have the banks that get going towards the end of the week. So there'll be plenty coming down the pipe. So just sit tight and, we'll ride through this volatility together, right? So as always, if you have any questions, comments, please reach out. Love to hear from you. Have a fantastic night, and I'll talk to you guys tomorrow.